Hello, everyone, and welcome to the Hospitality Edge podcast. This podcast is meant to bring together what we think are two sides of the same coin, real estate and hospitality. Whether you are a current or aspiring short-term rental property manager, host, or real estate investor, you're in the right place. Dive in with us to uncover the captivating stories and golden nuggets from industry heavyweights, including leaders, operators, investors, syndicators, founders, and entrepreneurs. So thank you. Really, thank you for embarking on this journey with me. I really appreciate you taking the time to listen to this podcast, and I promise I'll do my best to deliver value-packed episodes that hopefully will not just inform, but also help inspire the next generation of real estate and hospitality professionals. Truly yours, Sebastián Muñoz. Welcome, everyone, to the Hospitality Edge podcast. Today, I'm very excited to have a very special guest, Jeff Brown, serial entrepreneur and founder of IntelliHost. How are you today?
Good, man. Thanks for having me on.
Yeah, very excited to have you here as well. So listen, anyone out there that it's the first time joining, the Hospitality Edge is a podcast that is meant to combine what we believe are two sides of the same coin, hospitality and real estate. And with Jeff here, we're super excited because Jeff has a long background of, entrepreneurship. He has been a director of operations. He has scaled companies from within and started a couple of companies himself, including IntelliHost, which is doing some amazing stuff around the much needed area of listing optimization. So Jeff, for anyone out there that hasn't heard of you yet, would you mind just telling us a little bit about your background and what you've been up to these days?
Sure. Yeah. My intro sounds a lot more impressive coming out of your mouth, so maybe we should let you do it. But I started in the corporate America out of college. I started with like really big companies like Target Corporate and kind of worked my way down to smaller and smaller companies until I finally joined a startup about 10 years ago now. Holy smokes. Anyway, it was an e-commerce analytic company, and we helped scale that. I was like employee number 4. We helped scale that company and sell it. And I was looking into getting into real estate, so I started dabbling in vacation rentals. I partnered with some people to flip me a property in Joshua Tree, California, and we started getting a love for like themed properties, and we started seeing an opportunity for. This was back in like 2017. So we were a little bit ahead of the game. And we started theming properties in Joshua Tree, California, saw it was doing really well. We decided to go into Florida and really hit the themed kind of market space. And we did a wizard's house and a galaxy themed house and a dinosaur house. Like we're talking like fog machines, carved beds, muraled walls, just like a complete immersive experience homes that we were doing. We were raising funds and investor capital to do that. That went really well, and we still manage that business and still grow it. But in the process of doing Loma Homes, the real estate company, we found just a lack of data coming out of the OTAs, and we really wanted more data to use and optimize with. So, being the data geek that I am, we created a tool internally that allowed us to dissect our booking funnel on Airbnb and understand where we needed to take action on our booking funnel. We took that, and eventually it was kind of a game changer for us. So that's when we created IntelliHost and made it a product that anybody could use. So that's kind of me in a nutshell. Hope that's not too long. Hope I didn't bore anybody.
No, that's awesome. That's awesome. There's a lot for us to cover there. So let's start with, your transition from the corporate world to, as you said, scaling it down to ending up in a startup. How did that happen? Why did that happen? Was it intentional, or, were you just kind of going through life and ended up in a startup?
Great question. I think it started unintentional and ended intentional. Let's put it that way. I started at the biggest company I could find coming out of college, because everyone knows you got to put the biggest name on your resume as soon as you come out of college. So I just found Target Corporate and went there. Got great experience, but I met my wife there, and she was kind of her home was in Minneapolis, and that's where I met her, but she was going to school in my hometown. And anyway, so long story short, I found a job in Utah, so that I could be close to where she was and we could get married. And it was a smaller company, but then I was like, the smaller company thing's kind of nice. And so found a smaller company and then a smaller one, and more opportunities just kept opening up in smaller companies. And I just kept finding more love for smaller companies. So,
But what was it? What was it about working with smaller companies after having been with such a large company that appealed to you?
authenticity. If I were to put it all into one word, it would be authenticity. I felt like I did a lot of innovative, proactive projects at Target and other places where I was making massive improvements to our processes. And as a result, they kind of pat you on the head, give you a 5% bonus, and move on. And I was like,
Okay.
I just saved this company like tens of millions of dollars. And so that that was part of it. The other thing is, at Target corporate, and I'm not calling out Target. This is really any big corporate company that you go
Yeah.
to. There's a big emphasis on what do they call it? Just networking and kind of buttering up to the higher ups.
Yeah.
And they would literally train you how to like say the right things in the elevator in the case you got into if case a VP entered your elevator and you needed to talk
They
to them and what
trained
to
you about
say.
that? That's so
Yeah,
funny.
and it was way more about buttering up to the right people than it was about
Yeah.
just doing a good job.
Okay.
And as I went to smaller companies, I was
The
like,
politics around the
oh my
yeah.
gosh, yeah, the politics. So I was like, I want a sincere workplace where I'm rewarded based on what I do. And as I hit the
Mhm.
extreme of that, I realized entrepreneurship is the exact, is the epitome of being rewarded for, eating what you kill, I guess.
Oh wow, that's interesting. Yeah, so rather than trying to make it look as if you're working, you can get focused on the work and kind of
Yeah,
let the results speak for themselves. That's so
go
interesting.
figure, right? Yeah.
That's so interesting. And so you ended up in a startup. What was that startup about? You were employee number
Um,
4.
Yeah, so it was a company that did e-commerce analytics. And what we did at that company is we estimated market share for big companies on Amazon. So like a big Fortune 500, say consumables company might come to us and say, "What's our market share of diapers on Amazon?" And they wanted to know the Amazon space. And so we pulled numbers and were able to calculate those things. So that's kind of where I started dipping my toe into online sales
Mm-hmm.
and online like retailer platforms and understanding how to optimize for them. And that's where I
Okay.
basically created that same company, but for Airbnb. And that's what IntelliHost is. I mean, we don't measure market share, but we help optimize listings.
Yeah. Okay. So being employee number 4 and having been with that company, I heard until that company eventually got sold. I mean, tons of learnings for you in that
Tons.
process. How many years were you there?
I was there about 6 years, I think, total. Yeah.
6 years. That's awesome. That's awesome. And so if you were to take that stage of your life and your career and summarize what were some of the main lessons, the main takeaways of having gone through that, company from being employee number 4, which is funny because it's my same employee number at Angel Host where I started, to now, well, to basically all the way until the exit. What were the main learnings for you that you took from that experience?
Um, that's such a great question. I mean, it's hard to kind of put it in a box, but I would say the main thing that it gave me was just confidence. I think that, I started as like an analyst. They just needed me to like be an account manager with customers.
Mm-hmm.
And I quickly got promoted into kind of managing all of data operations and kind of all operations for the company. And so what
Mm-hmm.
I learned was that entrepreneurship is less about brains as it is kind of grit
Mm-hmm.
and being flexible and just being willing to work through and solve problems. And I was able to watch firsthand the founder go through every single problem and how he dealt with it, and realizing, there's nothing magical. about an entrepreneur. And I, I hesitate to say that because he's still my mentor to this day, and we have a great relationship. But like, there's nothing, people tend to put entrepreneurs on this pedestal that they're like Harvard MBA grads and they're just like next level genius. But I don't think entrepreneurship is so much about that as it is just grit and willing to crank through it. So
it's so interesting. So interesting
yeah.
you say that, because when I look at, working in a startup, one of the main things for me, the lessons has been, it's about tackling one problem at a time. It's not, even though, my CEO has years of experience, and multiple, exits under his belt, he's still figuring it out one day at a time. And I can totally see how that can give you confidence to then say, oh, maybe one day I can start something on my own. So, okay, so 6 years there, learn a ton, gain confidence, went through, the process of gaining more and more responsibilities and learnings and whatnot. And did you stay with the company after it sold, or did you move on right away to something else?
Yeah, I did. I'm a little embarrassed to admit that I didn't really want to be there for the whole time, but because I was early in the company, I got enough equity to keep me there and keep me my handcuffs tied to the company. I'm always chasing the shiny object, and so I'm always like looking to change and change and change. Had I not had those handcuffs to the company, I probably would have been gone. But I stayed. So we were there about 3 years until it sold, and then I was there another 3 years just to get my burnout. And once that came, it was pretty much gone. So yeah.
Interesting. It's interesting how you refer to it as handcuffs, which, I mean, it is incentive, is good, is better than not having it, right? As employee stock options and all that stuff. But at the end of the day, yeah, that's what you're trying to do, right? You're trying to retain your talent and make sure they stick around. Okay, so it was 3 years before the sale, and then 3 years just waiting for the earnout to come. And what happened then? You got your earnout. Did you take a little bit of time for yourself, enjoy a little bit the fruits of, or did you just jump into your next project right away?
Well, it was actually, I mean, looking back, it's probably horrible timing, but I had already started our first property in Florida. So Loma Homes actually started before I left that company. And we had like 1 or 2 properties at the time. And so I already had a thing that I was going to jump into, and I really didn't even take any time off. It was just like, hey, ready to go into, something that I can actually grow and put into. So, I went straight from that company to Loma Homes, and I've been there for 3.5 years.
So Loma Homes, was it something that, real estate, was it an asset class that you were already studying while you were at the startup there, or how did you get interested in real estate, and what was your first move, or your first acquisition, before it was even called Loma Homes?
Yeah, well, I had enough savings while I was working at that tech company to start and to try and to kind of test out the vacation rental asset. So I had enough saved up where I found this, like, at the time, Joshua Tree, California was like nobody had ever heard of it. And I ran the numbers using like AirDNA and some other, software, and thought, okay, this little pocket of land is so cheap and the revenues are actually quite high. And so at the time, I knew this couple, this husband and wife couple, they're friends of mine, that were flipping properties across the country, and they were doing a beautiful job of it. But when I tried to buy in Joshua Tree, California to do short-term rentals, there was like no inventory available that I'd actually want to buy. It was all trailer park, like mobile home kind of stuff, and I was like, I don't really want to buy this. I want an appreciating asset. And so I hired them to say, look, I will guarantee you guys a price of purchase if you will make me an Airbnb. Like, find the property, flip it into something amazing, and I'll buy it from you for X price. And so they said, great. And so that was like 2 or 3 years before I quit my job at the tech company. So that was kind of like running in the background, and I was testing this model before I ever quit. And when it started to take off and we could see really good numbers coming from those investments, it was like, okay, this is this is something I can jump into. So it wasn't like I just like jumped ship and was like, okay, well, now find the next thing. It was like, okay, I'm ready to go into this full time. And
Wow.
that
That's
was
interesting.
that was the transition.
But you mentioned right away, that you went into RDNA and you looked at how much you could make. Why short-term rentals? Why was it? Why did you default to short-term rentals? Was that an exploration and you ended up stumbling, across short-term rentals, or how did you? What was
Yeah.
your the first time you were introduced to vacation rentals and short-term rentals in general?
Yeah, I've always been passionate about real estate and like just investing in general. So I've always had a passion for financials and running numbers and Excel spreadsheets. And so I always run numbers on different investments and different possibilities. And when I looked at my options, real estate just seemed like this like you can't lose opportunity. As long as you're willing to buy and hold, it seems like anyone who gets into real estate just wins eventually.
Mm-hmm.
And so for me, it was like, all right, well, if I'm going to do real estate, what's the most profitable way to do real estate? And at the time, my sister was renting her property. She moved out. She was moved from the East Coast and like Boston or Maryland. Sorry, it was in Maryland area, and she moved to Utah, and she was just renting out her property on Airbnb. And she was telling me like what cash flow she was getting out of this thing. I was like you can't get that kind of cash flow in any other type of real estate. So if I can get the cash flow and the asset appreciation, this seems like a no-brainer. And
Mm-hmm.
that's when I started to dig into the numbers and just started to say, well, this has got to be, maybe this is just like an anomaly. And the more I ran the numbers, I was like, actually, this could be repeatable, and let's figure out how to take it to the next level. So
Interesting.
that's where we went with it.
So it's interesting that the first let's say deal you did, based on what you're saying, was this couple that was flipping, and you said, hey, flip it for me, I'll pay you a price, and then I'll take it from there. So that was the first property you bought. It was through that couple that flipped, and you said, hey, just flip them for me, and then I'll guarantee you a price. Was that the first acquisition you made?
Yeah,
Yeah,
yeah, and they're my business partners today. So
they are.
um,
Okay.
yeah, so once we did that first property and we could see that it was cash flowing well, they were like, forget this flipping business thing. Like we could just go do vacation rentals and make more cash flow and all these things. So, um, yeah, that's what it turned
So
into.
back to your analysis of, you say you've always been interested in real estate in general. So you like spreadsheets, running numbers, whatnot. When you look at something like multifamily, which I'm sure you might have analyzed as well as an option of where you could invest, maybe not, you tell me, but versus short-term rentals, um, there's pros and cons of each, but I want to hear your thoughts on the fact that, with short-term rentals, you can get more cash flow. So if you look at it from a cash on cash return perspective, it's better. And then you were saying, okay, I'm still going to get some appreciation, which is true. But I feel like on the other side, with multifamily, it's easier to leverage your growth and put in place that, forced appreciation, where you can
Yeah,
from the get-go know, hey, if I increase my NOI from this to that, I'm going to be able to refinance, I'm going to be able to, take my equity out of this and go buy something else. It's happening with short-term rentals, or at least there's more and more
yeah,
companies that have the thesis that, hey, I'm going to put together a short-term rental portfolio, and eventually private equity is going to be interested in coming into the space and buying based on cap rates and whatnot. Was that ever a consideration for you, or were you just so impressed by the cash flow that you were like, the appreciation as long as it appreciates with time, with the cash flow being so good, I'm going to be fine?
I wish I could say I was that sophisticated when I got started. I mean, I looked into multifamily and saw that, but at the time, it seemed like too big of a it seemed like too much for me. Like I just seemed like a little guy that was trying to like save up a little extra cash and buy a single family home. And so I was trying to maximize the capital that I had. And now, I mean, I haven't analyzed a multifamily deal in so long because of, being where I am. But I wouldn't say it was a matter of comparing multifamily to short-term rentals and saying, okay, short-term rentals are better. It was more like, how much return can I get on the little savings that I had,
Hmm.
and that's really what motivated it. I wish I had maybe thought of it that, in broad perspective, but um, because I agree that the forced appreciation thing is something we've been trying to do in the short term rental space, but it's not there yet. There's just not enough buyers in the space that are willing to, and banks are not willing to value a home based on its income for short term
Hmm.
rentals yet. And if it's zoned as residential, they just like, well, let's look at the comps, right?
There you
And
go.
so we have tried the portfolio route, um, and it hasn't played out. There's just not enough appetite. We got very close. We got very, very close to selling our whole portfolio at an NOI cap rate, and then rates jacked up, and it was like everything just fell through. The
Mm.
financing of the buyer fell through and everything, and so I think we're close to getting there in the short term rental space. Um, and that was the other thing is we thought, okay, if there is potential to sell on a cap rate valuation, and like short term rentals are the way to go because your income is like 3 to 4 times what you get for a long term rental. And so that those dollar signs, perked up a lot, but it was a little bit unrealistic for the time we're in. I think fast forward five years and that'll be normal, but we're not there yet.
Okay, so tell me about you started this couple became your business partners. So Loma Homes starts, and when do you get into the process of also raising capital? Because I believe that it came also as part of what you guys were doing. Um, was it right from the get go that you guys started bringing in outside investors, or did you do a couple of deals first with just your own funds?
Yeah, the way it evolved for us is the first one was just my own savings. So just try to prove it with my own capital, and then once we could show some good numbers on that, my partners already had relationships with friends and family that were investing in their flips. So they were doing private loans from family friends to buy properties, flip them, and then return the cash. And so they had relationships that they were able to leverage for our next two properties that we bought, and they helped us acquire the next two. After that, we said, okay, we really need to think bigger in terms of scale. And in order to do that, we need to go more of a traditional fund model where you
Hmm.
raise a syndicated fund, you pool a bunch of money together, and you buy many properties. And we rose one fund that bought four properties after that. And then we rose another fund that bought, I think, seven properties, I think. Um, and so that's how we got to like 15. I think that's where we're at. I can't remember what the number is now, but
At
it's in
different
that range.
locations, right? They're spread across different locations.
Yeah. So the first one was in Joshua Tree. Then we did four in Orlando, well, I should say we did like one in Orlando, and then we did one in Panama City or Destin, the Panhandle of Florida, Destin area, and then both of those areas grew to four properties in Orlando and like nine properties in Destin, and now we've expanded to the Poconos Mountains area of Pennsylvania.
Interesting, interesting. I had a guest on that also has a fund. Is a VC as well, and has a short-term rental fund, has a multifamily fund. Anyways, he said that his advice, and I'm curious to hear your thoughts on this, for someone that wants to be a syndicator at some point would be start passive. So be a passive investor with an active syndicator, but be the most active passive investor just so that you learn how it works, and then go into playing with other people's money. So I'm
Yeah.
curious to know, you went through the process of creating this fund and whatnot. I'm sure you learned a lot of things along the way. For anyone out there that's thinking about launching their fund, or raising capital, like you did, what are some things that you know now you wish you had known when you first went through this process?
I would say I learned that I didn't like it seems obvious now that I'm saying it, but It wasn't obvious at the time. And that is, as soon as you open a fund, you've just created a whole new customer. And the reason I think that the advice that you got was good, or the advice that your friend got was good, is because you need to be to make a good product. I think you've got to be a customer of a similar product or something, so you can understand what type of service is, works, and what type of things you want. And so when I say that you're creating a whole new customer, those investors, you're now competing just like you would for any product. You're now competing for their attention on anything else they could invest in. So you've got to know things like what's their, like, what target are you going for, and what type of investor are you targeting? And you need to be really specific and very calculated on who you're going after and what your pitch is and how you're catering to that customer. Because within the investment world, there is a million different types of investors. Some are looking for tax advantages. Some are just looking for cash flow. Some are looking for wealth appreciation. And, there's just so many different types, and there's everything in between. You have to know what type of investor you are targeting, how to structure your deal for that investor, and how to market to that investor before you can really start to get capital. Because the capital game, especially in the beginning, no one's going to give you money without a track record unless they already know you. And so the only people that are going to ever give you money in the beginning are friends and family. And then they also put in a third F called fools. But those three are basically the only people that will give you money in the beginning. And then once you have a track record, other people that don't know you will give you money. But if you think you can just hit the pavement and go get out there and hustle it, you're going to be hustling a long time before you get anyone out from outside of capital. The best thing you can do is just network from the inside and get friends that trust you and love you to give you
and
a shot.
Fools. Don't forget the fools.
And fools. The fools, there are some.
Interesting. Okay, and so you were three partners, correct? Loma Homes. What was the distribution of the responsibilities like? Just at a high level, what role were each of you guys playing?
Yeah, so Kyle so I was the data nerd, right? So I would do all the analysis and market research to figure out where we should go, what strategy we should take, and then I would basically tell Brindy, okay, we need, like, the thing that works in this area is this kind of these amenities, this strategy, these types of people make a house that's perfect for them. And so Brindy would then take it and renovate the property. Kyle, her husband, he has his realtor's license, so he was like the acquisitions guy. Brindy is like the rehabber and the designer. And then once the house is ready, they would hand it back over to me for property management. And I would manage the team long-term for property management. And I mean, recently that's changed. We've kind of outsourced some of the property management and things like that, so we can focus on IntelliHost and whatnot. But that's how it originally started.
Interesting. And so tell me more about, okay, so you're doing Loma Homes. You said you even got close to being able to sell the portfolio, but the timing wasn't great. Interest rates went up, and so that put a pause, not an end, a pause to that exit. So you built IntelliHost as a solution to your internal needs as at Loma Homes, and that's where you saw the opportunity. How did that happen? And tell us about that transition and that decision of yours of saying, I'm in an opportunity vehicle right now that I believe in, still believe in, but this new opportunity comes across, and I think maybe there's more potential in that, or not more potential, but at least it makes more sense for me to now focus more on that. How did you come to that decision? Because it's not an easy decision. You were what, 3 years into Loma Homes?
Yep.
So how did that happen?
Great question. it's kind of like how all of my entrepreneurial ventures have started. It starts with just like this idea that you become obsessed about. And like the real estate and short-term rentals, all of it started with this idea of like, oh my gosh, I could make a lot of money with this. And then it escalates to like, once it hits the spreadsheet and you start to run the numbers and you start to figure out it's actually viable, then it starts to get more exciting. And before you know it, I don't even know, it just kind of grows on you where you're like, wait a minute, hold on, putting the pieces together. Eventually you find yourself like in this venture or entrepreneurial venture, not knowing how you got there in the first place. But with IntelliHost, it was similar. It was more it just started out as like, look, I'm going to collect this data. We're going to create this like technology that will collect this data in a way that nobody's collecting it right now. And we'll just use it for ourselves. And if it works and it really helps our business, well, then we have something that maybe we can turn, into a product later. But that was honestly, was like in the back of my mind. I just thought there were so many obstacles before that would ever become a reality that I was like, let's just build something for us. And, but then it really showed us numbers and insights that we were like, holy smokes. Like I had no idea that if you got a 4-star review, it would do that to your ranking. And I had no idea that if you changed your price by 15%, it would do this to your ranking, So it just showed us so much insight that we were like, there's got to be more people excited about this. So that's when we're like, all right, let's just bite the bullet, invest in a team that can build this for us and launch it.
Was that a you initiative as far as Jeff, hey guys, I'm now gonna be doing this myself, fully or partially? I don't know how that happened, or did you do it with your same 2 other partners?
Yeah, I wanted to be upfront and frank with them. Like I didn't want to like ditch them because we're halfway through this like big company we're building together, and I didn't want to just be like, hey guys, peace out, I'm out. So what I did is I said, look, I think that this product could be huge, and I kind of presented the idea to them and said, look, I don't want to ditch you. I want to go work on this. So let's just put this new company or product underneath the same umbrella, so we still get the same share of everything. But this will allow me to work full time on this thing, and then we'll shift some responsibilities around, and outsource this, and do that. And they were very supportive. They thought they really believed in the idea, and they believed that I could pull it off. And so they were able to shift the responsibilities, the ones that I had on originally, and they kind of took on some of those, and we outsourced some others. And now IntelliHost is basically underneath the same parent umbrella. It's its own company, its own entity. But that way, I could still kind of share in the winnings. It's like if IntelliHost doesn't work out, then we still split the parent company, the thing that they're working on, and if their thing doesn't work out, mine it might. So it's kind of like a hedge against our bet. We both they're working on the real estate side, I'm working on the tech side. They might both win, one of them might lose, but it increases the chances for both of us. So.
Interesting. Yeah, it's an interesting approach as a hedge, as you're saying. Because but you're no longer playing an active role in Loma Homes. Now you're fully into IntelliHost. That's correct.
I think that's pretty accurate. I mean, I try to help out as much as I can, and we're still we're still a team, and we still help. But I would say 99% of my time is on IntelliHost now, for sure.
Mm-hmm. So tell us more about IntelliHost. I mean, we at AngelHost use the platform and are big fans of the platform, and we love it. Awesome. There's a need definitely for what you guys are doing. Tell us a little bit more about it and what makes you stand out, and what makes you different from the other solutions that exist out there.
Yeah. So I would say the things that make us different, number one, all the data that we collect is straight from Airbnb. It's not like, so for example, I'm not going to name any companies, but like there's a lot of companies that collect Airbnb data, but what they do is they collect it publicly available scraped information. So it's like things that you can find on their calendar. So like most companies will go scrape the calendar, estimate revenue, things like that. What makes us unique is that we go behind the login and we pull your data for you straight from the horse's mouth. So there's no guesswork on like how much revenue or um, how much like first page impressions you got or clicks or anything like that. It's all accurate data, but then we're able to manipulate it in a way that helps you visualize your booking funnel, so that we break down the 4 steps every guest takes to book your property, meaning impressions, overall search, how many times you got in search, and then first page impressions, meaning how well are you ranking, third step being how well are you getting clicked, and then finally how well are you being booked, your conversions. And by breaking it out that way, we then benchmark each step against your competition, so you know if you're winning or losing on a given step. And then you can diagnose that step to open up your funnel. For example, we helped one customer who had just tons of eyeballs on his property. He was ranking so well, but he had one issue wrong in his detail page. So his whole funnel was like this. It was just completely pinched at the bottom. So he's getting all these eyeballs, but like he wasn't getting bookings. And that's why we always stress, like, you've got to look at all 4 steps of the funnel. And that's another thing that makes us unique, is we look at the whole funnel and not just like ranking, for example. And that way we were able to help him fix that one thing, and his whole funnel went like this, and bookings flowed through. So, it only takes one of those 4 steps to pinch off all your bookings, and we help you diagnose which step you need to work on.
That's huge. And you guys are also generating recommendations. I don't know if you guys use artificial intelligence at all for that, or
we're working on that. Yeah,
you guys are working on that, right?
Yeah, right now what we have is we've basically come up with our research and with the data we're collecting, we're able to identify what's working and what's not. And there's a lot of myths out there as far as like what you should do to your listing, and like make minor changes every day to your listing and that'll boost your rank. And there's a lot of myths, and we use our data to debunk those myths and then provide recommendations that actually are supported by the numbers and supported by the statistics. And so what we've done is we've created this comprehensive list of things that we evaluate a property on. So if somebody's struggling with clicks, for example, we know like the top 10 things that would affect that, and we evaluate the property based on those things, give them, an optimization score, and help them focus on, the piece they really need to work on most.
Interesting. So going back to, you had this experience as employee number 4 in a startup tech company, grew, sold, all that stuff, gave you confidence. What would you say, if anything, are perhaps some things that you've been like, I remember back then, I remember back when I was scaling this, technology company, as an entrepreneur. Are there any things that you've applied when it comes to setting up IntelliHost, or is it more so like we were saying, just one day at a time, one problem at a time, and let's just focus on making progress?
Yeah. There's one glaring problem that we had in that first tech startup that I still have a little bit of PTSD from. And so it's been a very heavy focus in IntelliHost. Not that we haven't had our own challenges with the same problem, but when we started with that company, we didn't really anticipate the scale that it achieved, just like any tech startup. And it was really, like, the whole system was just really slow. It was really bogged down. The UI experience was just horrible because anyway, it wasn't built for the type of scale we were achieving. And so ever since then, I have been like fist pounding on the table to the tech team to say, like, scale is what we have to think about. We have to prepare for. We need to be thinking years in the future, not weeks in the future. So like I said, it's not without our own challenges. We had the same issues, a few weeks ago, and have since resolved those. But I would say just thinking ahead and thinking about long term has been the number one learning that I had from that experience, because I was also, as operations guy, I was also over customer service. And, we were serving Fortune 500 companies. And when P&G calls you and starts yelling at you because your site's slow and your team has to be the one to like smooth them over and make them happy, I had a lot of PTSD from that job, and
Right.
so yeah, it built for scale, I'd say.
Built for scale. That's interesting. So yes, indeed, you were in operations. You led operations. So I would say you are a product oriented founder. So what would you say about transitioning from in your previous experiences operations to now being CEO? uh, has there been a shift in the way you look at your responsibilities and where you should be spending your time, or is it too early still, because anyways you need to be too hands-on where you guys are at? Have you seen yourself intentionally redirecting your energy and time elsewhere now that you're not operations and you are the CEO, or you don't see the difference?
I'd say we're still early enough that I'm very involved in the operations. Because I can be still, right? Like I want to be involved as long as I can. And because I believe that the most successful companies are customer obsessed. They know their customer inside and out. They know what they like, what they don't like, and they get on calls with them. They talk to them personally. And that's a really big value. It's like number one value we have in our company is customer obsession. And so I never, no matter how big the company gets, ever want to stop talking to customers. Not that that would ever be my full-time job, but I never want to stop that connection. And so especially in this early stage where we're still kind of, you know, we're still figuring out the product, we're still working out the kinks, and I want to be as white glove with these customers as I can until we just scale beyond my ability. And I'm waiting for that point. But I'm willing to scale and do what it takes, but I want to wait until we have to.
That makes sense. That makes sense. So you talked about being customer obsessed. I like the word obsession because it demonstrates not just that you care about it, but that you really care about it. You see what I'm saying? So are
Yeah.
there other things you would say? I know it's a big word, but that you would say you're obsessed about within the way you're trying to build IntelliHost?
Yeah, we're very obsessed about how do I put this? I'm trying to put this in like a single word, but I guess just calling it integrity. And when I say integrity, I mean like I'm talking about integrity of data, integrity of product, and I want to make sure that what we're delivering isn't just to get a sale, but to deliver value. And to me, that's business integrity, like delivering value above and beyond what you're getting paid. And that's really, to me, that I think we're obsessed about. Like, there's a lot of stuff that we can build that people are asking for, things that like just don't work. And we just refuse to do it because it doesn't matter. Like, for example, there's some software that will build a tool that will go in and change your listing a little bit every day, right? And the theory is that that improves your rank, but it actually doesn't. Like, we actually have numbers to prove that it doesn't. And so having the integrity to not sell people something that they're asking for, even if they want it, because it doesn't work, right? It doesn't matter. And that's something we're very obsessed about in our company.
That's interesting. That's interesting. It's not so much, it's not what the client or the customer thinks they want. It's what is gonna actually help them the most that you're trying to focus on. So
Exactly.
that's
And
awesome.
and this industry is fraught with tons of misinformation. Like, what people say works in ranking on Airbnb, like, it's just wild, the theories I've heard. And I'm like, have you gotten any data on that? Like, have you actually questioned that assumption? And people are like, no, everybody just says it works. And you're like, holy cow, like, yeah, I could just monetize this and do what you want, but that's not what we're about. So yeah, I'm pretty passionate about that.
That's very interesting. That's very interesting. So, Jeff, starting a new company, a tech company, is not an easy thing to do. I'm sure there's a lot of challenges. I'm sure you work very, very hard. So I want to know. I don't really believe in the concept of work-life balance, but it's going to mean different things for different people. But I'm curious to know what's your definition of balance, and how do you stay centered? I mean, we were talking about the fact that you work out and all these things. What does that look like for you, and how do you approach sustainability as well when it comes to something that requires as much energy and as much time and as much intensity as starting a technology and scaling a technology company?
Such a great question. And I would say that for me, and I don't know how this works for everyone, but I think it's important to align your values with your time, and blocking off, like deciding what matters most to you more than anything else, and set time aside for that thing that cannot be interrupted. Um, and so to give you I'll tell you what my priorities are and how I do it, but this is going to be different for everybody. Number one thing for me is family. So I have 5 kids, and that takes time. And so I get home at 5 o'clock, and my time is for my wife and my kids until 8 o'clock when they go to bed. And then once that 8 o'clock comes around, well, I can get back online and do what I need to do. If I need to stay up late, I stay up late. But there's very, very, very rare circumstances where I would take that time from my family for a tech startup. So number one is my family. Number two is my own health. Maybe I should put those in reverse order. I don't know. It's arguable. But like you mentioned, exercise. I see exercise as something that just amplifies everything else. Like if I'm healthy, then it will help me in every other aspect of my life. So that's a priority. I just always, at the same time, every day, I go to the gym and I do my thing, and I leave. So there's very, very little that gets in the way of that. And then everything else is filled with my career and, tech startup and real estate company and all those other things. So I think it's just aligning your time with your priorities, and being very strict with your guardrails on those priorities.
And it's not easy, because you could easily go on, and I'm sure you'd have more than enough things to work on if you wanted to keep going until past 5 p.m. and skip the gym and skip the family time. But it's interesting that you're able to set those boundaries, and I can understand how with the family, that can be a big priority, and I don't want to say easier, but it's I mean, you have 5 kids, you need to take care of them. But when it comes to your own health, I feel like that takes a little bit more self-discipline to actually put boundaries around, because it's so easy to not take care of your health. It's so easy to just put that as a low element in your priority list. So how do you make that a priority? How did you build that discipline? Have you always had it, or is it something that you have developed with time? And is it because you do tell yourself, no, I'm doing this because it's actually going to make me better at my job, and it's going to give me more energy, all those things? Or is it also because you enjoy it and it allows you to just think about other things? How did you build that discipline, if I can ask it that way?
It's a little bit of both, in terms of like having the discipline versus just enjoying it. But I would say the best book I ever read on that topic was Atomic Habits. And I think it's really important. If I have one superpower, it's rituals or routines. Like, I'm a very routined guy. Like, I have the same thing for breakfast and lunch every day. And that's because I have to make sure that I get the specific like nutrients and calories that I set for myself. I eat the same thing in breakfast and lunch because my wife usually makes dinner, and that's the variable. And so I make sure that, it's just the routine of like what I can control, I make routine, and I stick to that routine for years until it works. And I believe heavily in routines.
Yeah, no, they say you are what you repeatedly do, right? Like you are the sum of all your habits. And yeah, I read Atomic Habits too, and it talks about the concept of starting small, right? If you are wanting to start a new habit, let's say you want to work out, well, start with 1 minute. Start with 1 minute a day and build the habit. And
Yes.
yes, I guess it's just a matter of not letting distractions come in the way and taking you off course. But
Yep.
no, this is awesome. This is awesome. So Jeff, wrapping things up here, if you were to give, advice, right, to, I mean, let's say a business entrepreneur, and we'll leave it general so that it can be applied whether you're starting a fund or a tech company or a property management company and scaling it. And you were to say, hey, look, if you're starting and wanting to scale a business, this is the one thing that I would have you do today and implement today within your business that, from your experience, has had the biggest impact on your success. What would that be?
Uh, there's so many things that I could say or would like to say, but the first thing that comes to my mind is, a word I already used, but that's grit. And I would read Grit by Angela Duckworth, because I feel like entrepreneurs have a shiny object personality. We're always chasing the next shiny thing. Um, and it can be a good thing. It can be helpful, but it can also be a distraction and an impediment to your business. So you got to find a fine balance between chasing the shiny object and being willing to pivot in your business, but harnessing and controlling that nature through grit and sticking with your routines and charging forward on a given path is going to drive more success, in my opinion, than anything else I could say. I mean, everything else would be too business specific. I feel like that's a very
Yeah,
general advice that I think would apply to just about anybody.
yeah, because otherwise, if every time you struggle with something, you start moving in a different direction,
Yeah.
then you end up spread all over. And no, that's awesome. I like that. I've heard of the book. I haven't read that one. I'll give it a read and let you know how that goes. So Jeff, what can people expect to see from you and IntelliHost in the next 12 to 18 months?
So we're scaling IntelliHost. So if you the goal is that you won't if you're an Airbnb host, you've heard about us and you're have used us or will use us, and we just feel like the data that and the product that we've built is that critical, and it will become a household name in the Airbnb space in the next 12 to 18 months.
I'm sure it will. And just before I forget, though, are you guys planning on raising capital? Is that something you guys are thinking about, or do you plan on bootstrapping this completely?
I mean, we're right now we're bootstrapped, but I mean, we're not closed minded to the idea. Obviously, you want to keep as much equity as you can, but we'll see. I think there's a couple of things we need to prove out, and in our own business model before we could get a really good valuation on something like that. So we have enough capital to really prove this and show a really strong track record before we go out and raise capital. And one of the best advice I've ever heard is the best time to raise capital is when you don't need it.
Mhm.
So we want to prove really great financials before we approach something like that, so we can command our own terms and things. But not closed-minded, but I'd rather avoid it if I can. How's that?
That's interesting. That's awesome. All right, Jeff. Well, listen, this has been very, very insightful, very inspiring. I think there's a lot of nuggets and a lot of pieces of wisdom, and it has certainly been very fun for me to have you on today. So, where can people connect with you, Jeff, and with IntelliHost?
Yeah, you can email me directly, Jeff at IntelliHost.co and IntelliHost.co. Happy to connect with you there. You can find me on LinkedIn. Yeah.
Amazing, amazing. Well, thank you so much, Jeff, for your time, and I really look forward to having you back on the show. A few months from now, and see where the progress is at. I'm sure there's a lot of good stuff coming for you guys, and I wish you all the best.
Thanks so much.